Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine a company trying to bridge the, let's say, rigid world of Wall Street with the dynamic, often quite volatile, realm of cryptocurrency. Its stock soared over 200% on day one. I mean, a stunning debut. But in a landscape really littered with promises and disappointments, we need to ask, what genuinely sets Bullish Global apart? As an investor eyeing that next significant opportunity, will this initial momentum propel it to enduring success? Or is it going to fade like so many others? Today, we're equipping you with the crucial data, insights into key leadership decisions, and a powerful Bitcoin thesis to help you determine if you should truly be optimistic about Bullish. Stick with us because we'll uncover a fundamental difference, maybe a deeply embedded strategic advantage that could profoundly impact your financial decisions in the years to come. Let's start right at the top. Who is steering the ship and what's their background?
Right, that's a critical place to begin because the caliber of leadership at Bullish is actually one of his strongest assets. At the helm, you've got CEO Thomas Farley, a genuine Wall Street veteran whose resume, well, it speaks volumes.
Former president of the New York Stock Exchange, isn't he?
That's the one. So he brings an unparalleled understanding of regulated markets, high-frequency trading, and, the intricate dance of institutional finance. His strategic vision has been absolutely pivotal in cementing Bullish's position not just as another crypto platform, but as a truly institutional-grade digital asset exchange.
So more than just talk then, what specific actions demonstrate that?
For instance, he personally spearheaded the formidable effort to secure crucial Tier 1 regulatory licenses, Gibraltar, other key jurisdictions. This foresight is what uniquely allows Bullish to handle massive trading volumes. We're talking over $647 billion in notional trading in just the first quarter of 2025 alone.
Wow, that's a huge number.
It is. And crucially, they handle it while effectively minimizing the kind of systemic risks that crippled so many unregulated platforms you might remember from recent market turmoil. This isn't just about doing things by the book. It's about building a robust, transparent system from the ground up that inspires confidence in major financial players.
And who else is key on that team?
Supporting Farley is Chris Tyrer, the president of the Bullish Exchange. His deep experience spans both traditional finance and complex crypto derivatives. He's been instrumental in driving key innovations. A prime example, the launch of Bitcoin-dated futures settled in USDC.
USDC being the stablecoin pegged to the US dollar. Why is that settlement choice so important for institutions?
Exactly. It provides institutional investors with a reliable, transparent, and predictable settlement asset. That's crucial for large-scale financial operations. No unwanted volatility during settlement. This particular move significantly broadened the platform's appeal to institutional players like hedge funds, who are constantly seeking more sophisticated, lower-risk hedging tools.
Okay, and the finance side?
David Bonanno, the chief financial officer. He oversees all financial operations with a sharp focus on compliance and capital efficiency. He recently navigated the company through a strategic shift, moving from immediate profitability to a first quarter 2025 loss of $348.6 million.
Okay, nearly $350 million loss in a quarter. That does sound like a red flag for investors. How strategic was that, really?
It's a fair question and absolutely critical to understand the context. This wasn't a loss from poor trading or operational inefficiencies. It's the cost of building a fortress. The bulk of that $348.6 million went into three main areas. Significant tech and infrastructure upgrades to scale for massive institutional demand.
Okay.
Talent acquisition, hiring top-tier engineers, compliance experts, sales teams straight from traditional finance.
Right.
And global market expansion, setting up regulated operations in new jurisdictions. Think of it like investing heavily in the foundations of a skyscraper before the tenants move in.
So long-term plays, when do you expect those investments to actually start generating revenue, not just volume?
We anticipate seeing tangible returns, specifically an increased fee-based revenue from higher volumes and new product adoption, probably within the next 12 to 18 months. That points towards projected profitability by 2026, assuming current volume trajectories hold. It's an upfront cost for a much larger, more resilient business down the line.
Got it. And the board, any heavy hitters there?
Oh, yes. The board itself boasts heavyweights, including Brendan Bloomer from Block.one. Remember, they're the parent company renowned for creating the EOS blockchain.
Right, the EOS connection.
So that infusion of cutting-edge tech savvy from its roots is critical. These leaders' strategic decisions, like acquiring CoinDesk for market insights and intelligence.
That was a big move.
Huge. It directly shapes Bullish's trajectory toward institutional dominance. This clearly distinguishes it from many retail-heavy exchanges lacking that deep intelligence pipeline. Would rate this leadership team a solid 8 out of 10. Maybe not the visionary disruptor mold, but their blend of regulatory smarts and crypto innovation among the best, especially post-IPO.
You mentioned it's not founder-led in the traditional sense. Brendan Bloomer is involved via Block.one, but Farley runs the show day to day.
It's exactly. It was launched in 2021 by Block.one, founded by Bloomer and Dan Larimer. Bloomer's on the board. Block.one has ownership, but Farley and his team manage operations. It makes Bullish more of a corporate entity, less a typical founder-driven startup. And it's backed by serious institutional money, think Peter Thiel, emphasizing robust governance.
Does that lack of a single charismatic founder become a liability, especially if tough regulations hit hard?
That's a perceptive point. While founder-led firms can have strong vision, they also carry key person risk. If that founder stumbles, the company can too. Here, incentives are aligned differently. Executive pay is tied to stock performance, trading volume growth. Farley holds significant equity.
So alignment with shareholder.
Precisely. And that fosters outperformance. You saw it in the 83% IPO pop. If regulations get tough, the strength comes from a deep bench of pros who get compliance, not just one person's charisma. For individual investors, this focus on institutional stability inherently reduces exposure to retail sentiment swings. Though, post-IPO lockups might bring short-term selling pressure, the structure is built for resilience.
Okay, let's talk mission and culture. What's their core philosophy driving this?
Their mission is crystal clear. Provide a regulated, institutional-focused digital asset platform, seamlessly bridge traditional finance and crypto with a heavy emphasis on security, liquidity, compliance,
And the vision.
to become the definitive infrastructure for global digital assets, powering everything from spot trading to complex derivatives, especially in a world where Bitcoin shifts from speculative asset to, a foundational treasury stable.
That aligns perfectly with the Bitcoin bull thesis you mentioned.
Absolutely. The idea that Bitcoin's scarcity and growing adoption could push it towards, say, $1 million by 2030 as nations and corporations accumulate it, Bullish is positioned right there,
What's their big goal?
dominating the multi-trillion-dollar crypto market by 2030. Their weapon, those highly efficient hybrid liquidity models designed to outpace competitors. The leadership envisions expanding into AI-driven trading solutions, specialized Bitcoin treasury services for institutions, anticipating that next wave.
And the culture. Regulated innovation sounds good, but how does it play out day to day?
It's not just a slogan. It's embedded. Rigorous compliance training, continuous risk assessments, strong incentives for diligent risk management. You see it in their independently audited operations, their impeccable record, 0 major hacks since launch. That culture directly drives ambitious goals, like hitting $97 million annualized revenue soon after going live. Post-IPO, maintaining that alignment between innovation and strict regulation is absolutely critical. It's about being nimble, but never reckless.
All right, let's trace their history. How did Bullish get to where it is today?
So they emerged back in 2021, right in the thick of the crypto boom, backed by Block.one's substantial $4 billion EOS initial coin offering, or ICO war chest.
That's serious startup capital.
Absolutely. And their core objective from day one was filling that institutional void. Traditional finance needed a platform with the security, liquidity, and regulatory clarity they expect. Key milestones followed quickly. Getting that crucial Gibraltar license late 2021, their regulatory bedrock. Launching with an initial $10 billion in liquidity from Block.one to ensure deep markets immediately.
And the CoinDesk acquisition.
That was strategic in 2023. Not just owning media, but enhancing market intelligence, getting a real-time pulse on the crypto ecosystem.
Then came the FTX collapse in 2022, a major test for the whole industry. How did Bullish navigate that?
That was a truly pivotal moment. While others were failing, freezing withdrawals, facing scrutiny, Bullish doubled down on regulation and transparency. That strategic decision let them completely avoid the scandals that sank so many peers. The result, a clean record, 0 enforcement actions, steady growth, and a massive boost in institutional trust.
So resilience under pressure.
Exactly. It proved their regulated model wasn't just theory, it worked under extreme stress. They became a safe harbor during the storm.
Have they shown agility since then?
Definitely. They've shown a remarkable capacity for reinvention. For example, proactively expanding derivatives in 2024 like ETH and CoinDesk, 20 index futures even during a bear market.
While others were pulling back.
Right. This shrewdly positioned Bullish to capture growing institutional flows, especially as Bitcoin exchange-traded funds, or ETFs, started booming bringing fresh regulated capital in. That foresight was key.
Let's look at the numbers again. $80 million revenue in Q1 2025, despite that $348 million loss from expansion.
Correct. And crucially, trading volumes soared to $647 billion in notional value, a huge jump from earlier phases, showing strong market adoption. Early on, they hit $97 million annualized revenue shortly after their 2022 launch. Yes, there were challenges like a delayed SPAC merger, that's special purpose acquisition company, in 2022 due to market downturns.
Right, the market was tough then.
But those experiences taught invaluable lessons in resilience. This track record really underscores Bullish's distinguishing characteristic, that inherent institutional fortitude. It positions them uniquely to thrive post-IPO.
Okay, let's simplify the business model. What exactly do they do?
At its core, Bullish is a crypto exchange. They provide trading, custody, liquidity services, the whole package, but primarily tailored for institutions.
So hedge funds, asset managers, corporate treasuries.
Exactly. Think of it, like we said, as the NYSE, but for crypto. A venue for major players to buy, sell, hedge digital assets like Bitcoin, but without the Wild West risks of less regulated platforms. It offers professionalism, reliability, security.
And the core technology enabling this, you mentioned the hybrid liquidity system.
Right, that's the nuance. It seamlessly blends automated market making, or AMM, with traditional order books. An AMM is like a sophisticated algorithm providing liquidity automatically, adjusting prices based on supply and demand. Think Uber surge pricing for trades.
Combined with traditional buy-sell order.
Correct, the advantage. Exceptionally deep and consistent liquidity, even during intense volatility. This tech dynamically adjusts, spreads the buy-sell price difference, critically reducing slippage for large orders.
Which means big players get better prices on massive trades.
Precisely. And while blockchain and regulation can seem complex for individuals, Bullish simplifies it for institutions through user-friendly APIs, application programming interfaces, and comprehensive compliance tools. It's more accessible for them than some tech-heavy rivals.
It's a crowded market, though. What really makes Bullish stand out?
What unequivocally sets them apart is that unwavering institutional first model. It sits right at the intersection of best-in-class regulation, economic efficiency from the hybrid liquidity, and that passion for bridging TradFi and crypto.
And the tight spreads are evidence of that efficiency.
Absolutely. Unlike many retail exchanges, Bullish's AMM pools provide consistent deep liquidity. You see in those exceptionally tight spreads on key pairs like Bitcoin to USDC. This depth drives profitability through trading fees, typically 0.02% to 0.1% on high volumes, a major revenue stream given the scale.
Can you give a concrete example of that advantage in action?
Sure. During the 2024 Bitcoin halving volatility, many competitors saw spreads widen 10 basis points or more, making big trades costly. Bullish consistently maintained spreads of less than 1 basis point, a massive difference. That attracted an extra $3 billion in assets because institutions prioritize minimizing slippage.
And this focus ties into Bitcoin treasuries.
Directly. Post-IPO, this robust model is perfectly positioned to cater specifically to Bitcoin treasuries companies holding Bitcoin as a hedge or reserve asset. It aligns with the view that Bitcoin's finite supply makes it superior to fiat long-term. Bullish provides the infrastructure for that corporate shift.
You mentioned companies using Bitcoin in treasuries. Beyond just hedging inflation, what else are they doing?
It's evolving fast. First, it's a strategic reserve asset, like digital gold. Think MicroStrategy holding it on their balance sheet as a primary asset, better than depreciating cash. Second, yield generation. Through platforms like Bullish, institutions can lend idle Bitcoin securely to earn a return. Structure products, lending pools.
Making the asset work for them.
Exactly. Third, financing. Companies can use Bitcoin holdings as collateral for loans, freeing up fiat for operations without selling their Bitcoin. Accounting-wise, it's typically an intangible asset. Value fluctuates, requires careful reporting. Bullish is building specific products to support these complex strategies.
How does Bullish reach these institutional customers?
It's a direct-to-institution model, primarily through efficient APIs, white label services for other financial firms, and strategic partnerships. They deliberately avoid retail apps, focusing on scalable business-to-business integrations suited for large firms.
And the global order books.
That's an innovative aspect. They sync seamlessly across regions, ensuring 247 liquidity, continuous trading, supports incredible scalability over 275 employees, handling $647 billion quarterly volumes. Plus, the CoinDesk integration provides critical market insights directly to clients. It's clearly worked. Look at the institutional inflows post-ETF approvals, boosting their market share.
Let's talk revenue predictability. That's key for individual investors assessing stability. How reliable is their income?
It's somewhat variable, yes. About 80% comes from trading fees, tied to market volumes. So if activity slows, revenue could dip. But crucial recurring elements like custody and lending services provide a foundational stability layer. We estimate those contribute 20–30% of recurring revenue from long-term institutional contracts.
Like sticky subscription revenue.
Kind of. This diversified mix significantly enhances stability compared to pure retail models. You saw it in their steady $80 million quarterly sales even amidst expansion losses. Still, crypto market cycles introduce variability. Understanding this mix of volatile fees plus the stable recurring base is absolutely key when assessing if Bullish can continue to run post-IPO.
Let's dive into the specific products and services. What makes Bullish indispensable to these institutions?
They offer robust spot and margin trading for majors like Bitcoin and Ethereum. But critically, it's the derivatives, dated futures for Bitcoin, Ethereum, the CoinDesk 20 index, all settled in USDC.
That's stablecoin settlement again.
It's a game changer for institutions. Predictability, reduced counterparty risk. They know the value they're getting. These products have clearly found strong product market fit. That $647 billion in Q1 trading volume proves significant, sustained demand.
What's new or upcoming on the product front?
Recent launches, like those dated futures in late 2024, really boosted engagement by offering familiar tools adapted for crypto. The roadmap is ambitious. Plans for perpetuals and options in 2025, broadening the derivative suite further. And they're investing heavily in R&D. Think AI-enhanced analytics for predictive insights, specialized Bitcoin treasury tools to manage large corporate holdings, anticipating client needs.
Anything truly unique for those Bitcoin treasury companies?
Yes, that's where they're really distinctive. Novel custody solutions for securing massive holdings, innovative yield-generating instruments, almost like preferred stock, backed by Bitcoin. Hybrid products where institutions earn yield on idle Bitcoin via secure lending. That really differentiates them. Looking ahead, the vision includes tokenized assets, digital versions of real-world assets on the blockchain. That would solidify their edge, blurring lines between traditional and digital finance.
Okay, let's look behind the scenes. How is Bullish structured operationally for efficiency and trust?
It's strategically designed. Headquarters in the Cayman Islands for tax efficiency and regulatory clarity. But they operate globally with key hubs. Gibraltar is the regulated exchange anchor, ensuring top financial standards. Hong Kong focuses on critical tech development, innovation, scalability.
And New York via CoinDesk.
Manages media and intelligence, leveraging that asset for timely, data-backed market insights that inform Bullish's strategy and their clients' decisions. They mostly lease facilities for flexibility, outsource non-core IT to robust cloud providers like AWS, but custody, fully controlled in-house.
Why is keeping custody in-house so critical?
It's about ultimate security and trust for institutional clients managing billions. They need absolute certainty their assets are safe, under direct control, not reliant on a third party where risks might exist.
You mentioned they control liquidity via their AMM and custody. How vertically integrated are they overall?
Moderately. Controlling those key aspects of the liquidity provision, custody significantly reduces reliance on external providers, unlike exchanges depending heavily on third parties for core functions.
What are the tangible benefits of that integration?
It directly cuts costs, enabling those near-zero spreads. It profoundly enhances efficiency and control, evident in handling $647 billion volumes without outages, even during extreme stress. Compared to, say, Coinbase, Bullish's model offers a superior institutional experience because of this integration, and risks like reliance on blockchain oracles for price feeds, carefully mitigated through multi-provider redundancy. Multiple backup systems ensure robust operations.
This sounds incredibly robust. Let's talk competitive edge. What makes Bullish genuinely hard to replicate? What's their moat?
Right, the moat. They operate in an oligopolistic market dominated by Binance, Coinbase, Kraken. But Bullish shrewdly carved out that distinct, profitable institutional niche. They hold maybe 5–10% market share in that specific segment, mainly leveraging their best-in-class regulatory framework. That positioning protects profitability. Institutional volumes are less volatile than retail flows.
So what are the key components of that moat?
Okay, let's break it down. First, economies of scale. Larger volumes mean lower per trade costs. That initial $10 billion liquidity allowed tight spreads competitors can't match without similar capital. That's a 20–30% efficiency gain.
Creates a virtuous cycle.
Exactly. Second, strong network effects. More institutions join for deep liquidity, making it even more attractive to others. User growth after launching futures over 50% year over year shows this self-reinforcing adoption.
Sure.
They've skillfully counter-positioned as a regulated fortress, a deliberate strategy, offering compliance and security others can't easily replicate, that Gibraltar license. It took huge effort and investment. It's a stamp of approval institutions value immensely.
Makes sense. Fourth.
High switching costs for institutions. Setting up involves complex API integrations, intricate custody. Migrating is costly financially and operationally. Clients become very sticky.
Sticky clients mean predictable revenue.
Precisely. Fifth, the brand. Cultivated trust, tied to Farley's NYSE background, solidified by the CoinDesk acquisition. Strong brand equity allows premium pricing based on quality and reliability.
6.
Truly cornered resources. That $3 billion plus Bitcoin treasury offers balance sheet strength and direct Bitcoin upside. Top-tier talent recruited from TradFi. Patents on their hybrid AMM tech. These attract talent others can't.
Okay, 7th.
Refined processes for compliance and liquidity create cost advantages tough to copy without significant time and money. Operational excellence translates to better service.
8th.
The proprietary hybrid AMM technology. Proven maybe 10 times more effective in providing liquidity during high volatility. Critical for large institutional trades. Impeccable timing. Launched post-2020 boom, catching the nascent institutional wave. Great infrastructure and got regulatory approval before the floodgates opened. First mover advantage in regulated institutional crypto.
10th.
Speed of execution. Rapid product launches, like futures, show an operational edge that discourages competitors trying to catch up.
And finally, that Bitcoin treasury focus again.
Yes. For Bitcoin bulls, Bullish's substantial holdings offer asymmetric upside, uniquely differentiates their treasury services. It's a direct link to Bitcoin's potential growth via a regulated entity. And that CoinDesk acquisition. It's not just news, it's proprietary data, sentiment analysis, on-chain insights, an intelligence advantage allowing them to anticipate market shifts. That's a hidden moat element.
With such strong foundations, what's the growth trajectory look like?
Very clear strategic roadmap. Deepen penetration in institutional markets via expanded derivatives, develop new products like tokenized assets, enter new regions with regulatory clarity, all significantly boosted by the tailwind of accelerating Bitcoin adoption as a legitimate asset class.
What are the biggest opportunities?
Geographic expansion, Asia, Europe, potential for more strategic M&A, leveraging synergies like with CoinDesk, maybe acquiring tech or intelligence capabilities. Regulatory changes are a risk, but successful expansion could yield significant rewards, maybe 20–30% year-over-year growth, similar to Coinbase's growth phases.
How broad are the applications for their platform?
Very broad, across asset management, corporate treasury, investment banking, family offices. Scalability via APIs means they can handle rising demand across multiple institutional verticals without performance issues.
And the market size?
The total addressable market, or TAM, for crypto exchanges, projected over $10 trillion by 2030. Massive. Within that, Bullish targets the $2 trillion institutional segment. Their strong regulation positions them to capture a significant chunk, potentially 10–15% of that high-value segment.
What are the key drivers fueling this expected growth?
Accelerating institutional Bitcoin adoption is number one. Ongoing expansion of derivatives markets. Increasing regulatory clarity globally build confidence. Growing inflows into Bitcoin ETFs funnel new capital. Plus, advancements in AI and trading tech enhance platform efficiency. These factors create a powerful, sustained tailwind supporting their growth targets.
Okay, no investment is risk-free, especially in crypto. What are the biggest potential challenges Bullish faces?
A critical question. While they have diverse infrastructure using multi-cloud providers, they still rely on blockchain oracles for external data. That carries risk if oracles fail or are manipulated. But they mitigate this with multi-provider redundancy backup systems and verification for critical data.
And customer risk.
It's reduced by broad customer diversity across geographies and industries. No single client or sector dominates revenue, providing stability if one area faces headwinds.
We talked about the regulatory moat. How vulnerable is it to erosion? What could challenge that advantage?
That's a sharp point. Even strong moats face tests. Erosion could come from new entrants, maybe well-capitalized TradFi giants building their own institutional crypto arms. Or from tech shifts, like more sophisticated decentralized exchanges, DEXs, offer compelling low-fee alternatives challenging the centralized model. Bullish knows this. They invest heavily in R&D, constantly assess the competitive landscape. Their speed and innovation are key defenses against moat erosion.
You mentioned anti-fragility. How does that apply here?
It means they can actually grow stronger from volatility, not just resist it. Their hybrid liquidity model excels under stress. Their regulatory stance proved resilient during FTX. Chaos actually drove clients towards their perceived stability. Instead of being weakened, they attracted business.
So they're built for longevity.
Well-positioned, yes.
Yeah.
Aligned with secular trends like Bitcoin's rise as a global reserve asset, maybe an 80% probability of relevance by 2050 due to scarcity. Their products focus on persistent institutional demand, not just retail speculation, helping weather downturns.
What are the main risks to growth, specifically?
Potential saturation in the institutional market as more players enter. Intensified competition, especially from established players like Coinbase targeting the same clients.
What about the unknowns, known unknowns, and unknown unknowns?
Known unknowns include unforeseen regulatory shifts imposing new burdens or significant drops in trading volumes during extended bear markets impacting fees. Unknown unknowns. Less predictable, maybe geopolitical Bitcoin bans, disruptive threats from quantum computing to cryptography. Bullish aims for adaptability, robust infrastructure, and financial flexibility to handle such surprises.
How do broader macroeconomic trends affect Bullish? And what's the current financial snapshot tell us?
Macro-wise, rising interest rates increase borrowing costs, but Bullish's $3 billion in assets provides a buffer. Global trade boosts tech supply chains, aiding expansion. Inflation, while squeezing margins elsewhere, actually benefits their large Bitcoin holdings as it acts as an inflation hedge. Company-level factors like potential policy shifts favoring crypto could boost growth. And the Bitcoin thesis amplifies its hedge role, benefiting Bullish's treasury.
Okay, the Q1 2025 financials again. Flat revenue at $80 million, but higher volume. Negative margins due to that $348.6 million strategic loss.
Correct. The rule of 40% metric revenue gross plus profit margin is around 10%. That signals prioritizing growth and investment over immediate profit, common in expansion phases. Return on invested capital is negative due to those upfront investments. Reflects building capability before full maturity.
But the balance sheet looks strong.
Very strong. $3 billion assets versus $600 million liabilities. Healthy, ample liquidity. Low debt-to-equity ratio gives financial flexibility. Free cash flow is negative, but improving as investments mature. Industry-wise, $647 billion trading volume. Net Bitcoin assets around $2.4 billion. Significant market presence.
How do they stack up against peers right now?
Current losses are wider than Coinbase's recent profits, but trading volumes are highly competitive, showing they're capturing significant share despite investing heavily. That shift from profit to temporary loss signals a clear growth phase, sacrificing short-term gains for long-term dominance. The implication for you: profitability projected by 2026 if volumes hold and investments mature. It's a long game.
What's the latest buzz around Bullish? How's market sentiment?
Well, the explosive IPO on August 13th, raising $1.1 billion, certainly generated buzz, improved strong market demand. Upcoming events, Q2 earnings release for the next financial snapshot, potential new derivatives launches, and always watch for significant regulatory news could be hurdles or tailwinds.
And how are individual investors feeling? Social media sentiment?
Overwhelmingly positive. Roughly 80% expressing optimistic sentiment based on recent analysis. Praising the IPO surge, the strong institutional backing. There are concerns about volatility among the other 20%, sure, given crypto's history, but dominant priorities are growth potential and Bitcoin exposure. You see comments like totally bullish or strong debut, high growth potential. Filtering the noise, the narrative highlights innovation, post-IPO health, and its role as a regulated gateway.
Okay, let's get to valuation, the number that matters most. How do we assess Bullish's price tag?
Valuation is critical for you, the investor. It's your compass for finding value, avoiding traps. The margin of safety principle, buying below intrinsic value, is even more crucial in volatile crypto.
Provides a buffer against errors or shifts.
Exactly. For Bullish, trading post-IPO around $78, market cap over $10 billion as of mid-August 2025. We need a multifaceted approach. One method isn't enough here.
So what methods are you using?
First, intrinsic valuation via discounted cash flow, projecting future cash flows. Assuming, say, 20% revenue growth to $500 million by 2030, this yields an intrinsic value around $50, $60 per share, a fundamental baseline.
Second.
Relative valuation, comparing price to sales multiple against peers like Coinbase, trading at 15x sales. Applying a similar multiple to Bullish suggests a fair value may be $40, $50. A market comparison.
And third, the Bitcoin-specific one.
Right, market to net asset value, MNAV. Crucial here because it factors in Bullish's $2.4 billion Bitcoin treasury. It compares market cap to the value of underlying liquid assets, especially Bitcoin. An M&AV of 4 times suggests significant upside if Bitcoin rallies, as Bullish holds so much directly. It acts as a proxy for Bitcoin's performance. This method clarifies value tied directly to that volatile asset.
How do you view the overall investment thesis now, bull versus bear?
The bear thesis, steel-manned. Ongoing volatility hits institutions and retail. Losses widen past $500 million. Competition erodes share, making current valuation unsustainable. FOMO traps on social media might point here. Conversely, the bull thesis, which we find more probable, robust regulatory moat, booming potential of the Bitcoin treasury as Bitcoin maybe nears $1, trading volumes likely tripling on institutional adoption. Social chatter reinforces this. Given regulatory trends and institutional shifts, we lean strongly towards the bull thesis.
So based on those valuation methods, is bullish a buy right now?
Currently, it's trading at a premium to its intrinsic value, about 30% above that $60 estimate. While the bull case could justify that premium if Bitcoin surges significantly, our analysis suggests it's not a buy-now opportunity with a comfortable margin of safety.
Better to wait for a dip.
Potentially, yes. Consider waiting for a pullback to enter at a more favorable valuation. Look for consolidation or market dips. Watch volume stability and institutional inflows. A price closer to that $60 intrinsic value would offer a much stronger foundation, buffering against turbulence.
All right, after exploring all of this, the big question: should you, the individual investor, be bullish on bullish?
Fundamentally, Bullish differentiates itself through that ironclad institutional focus, the innovative hybrid liquidity, and unwavering commitment to top-tier regulation. Those elements shielded it from FTX fallout, propelled this successful $1.1 billion IPO. Unlike retail giants, its AMM ensures deep liquidity for big trades, backed by $3 billion assets, including that significant Bitcoin treasury aligning with Bitcoin's long-term potential.
And post-IPO performance suggests momentum.
We believe it will continue performing strongly. That 83% debut gain, significant institutional inflows from majors like BlackRock entering regulated crypto, strong signals, especially amid clearer U.S. crypto policies emerging. So for you, the informed opinion is yes, be optimistic, given the robust moat in a massive market. But the caveat is inherent crypto volatility, requires a long-term view. Our perspective is rooted in that Bitcoin bull thesis scarcity driving potential 10x gains, making bullish a powerful regulated proxy.
Talk about first principles here.
Core truth. Bitcoin's finite 21 million is supply versus infinite fiat printing positions Bitcoin and Bullish's treasury as a superior inflation hedge, potentially outcompeting gold due to digital properties. For an edge, watch on-chain metrics closely. Bitcoin ETF inflows, over $1 billion daily recently, early signals of institutional FOMO, ahead of retail noise, and Bullish owning CoinDesk, proprietary insights, market intelligence, an underappreciated source of alpha for timing entries.
Sustainability hinges on execution, though.
Absolutely. Farley's leadership has navigated shifts masterfully, but risks like DEX competition loom, requiring constant innovation. Yet, with 80% positive social sentiment, Bitcoin's powerful secular trend, 80% probability of $1 by 2030. Bullish edges out peers. As an investor, dollar cost averaging into dips, leveraging Bitcoin's growing network effects, that's an edge.
And understanding that MNAV valuation.
Crucial. Trading at 4x net assets now could be undervalued if Bitcoin doubles, overvalued if crypto crashes. The key trend, institutions now hold over 7% of all Bitcoin, up dramatically from 1%. Massive adoption waves, Bullish is perfectly positioned to ride.
So, the final counsel.
Be bullish selectively. Post-IPO hype fades, but Bullish's distinct regulated advantage ensures long-term longevity. Consider pairing Bullish stock with direct Bitcoin holdings for balanced outperformance exposure to infrastructure and the asset. As our Bitcoin thesis predicts that dominating asset classes, this strategy could offer you a significant 5-10x edge over traditional stocks in the coming years.
As you reflect on Bullish Global, consider this. What happens when the very infrastructure designed to onboard the world's largest financial institutions into digital assets fundamentally reshapes not just how we invest, but what we even define as valuable? Could these regulated bridges ultimately redefine the global financial system itself, making today's volatile crypto markets the very foundation of tomorrow's stable economy? It's a question worth pondering as you navigate your own financial future.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.